Hey there, students. So in this video today, we're going to go over variable costs. Now, there's three main types of variable costs that we should talk about. These three types you'll see throughout the entire class. So you have to know what these terms mean. So what are variable costs? Well, the first main type is called direct materials. Now, second, we talk about direct labor. Sometimes I just call it labor. And third, we talk about overhead or variable overhead. Now, what is materials? What does that mean? So remember that car? Well, anything you add to that car, so imagine an engine. It's a material, it's tangible, you can hold it. That's called a direct material. Another example would be like a steering wheel or a tire. Whatever is needed to make that car, you need different materials to put it together. Now, another good example would be furniture. What do you need? What's a big material that you need for furniture? Wood. That's a direct material. It's a direct cost that you can trace to that product. So with a car, once again, a good example is an engine or a steering wheel or a tire, or maybe even the fabric that lines the back seat, right? That's a material you need for the car to be put together. That's the first type of variable cost. Second type, we call this labor or direct labor. It's the people that put the car together, right? They're in an assembly line here. They take all those materials, right? Engine, steering wheel, glass, whatever it might be to put a car together. They take it and they assemble it. That's called direct labor. That's a variable cost. Now here's another one, the third main type. Overhead, or we call it variable overhead. Now, a good example would be electricity, right? So you need that factory to make those cars. Now, to make those cars, though, you need electricity for that factory to run. That's the idea. So, there's a lot of different types of overhead. Let's go through a few examples here. Now, materials, that's pretty straightforward. Labor, that's straightforward. But overhead can be very tricky to identify what is overhead and what is not. Now, don't worry. I have a lot of cool practice questions coming up that will help you with distinguishing between labor, materials, and overhead. But let me give you some examples here of overhead. So electricity, you knew that one. Tools. So any tools that are needed to put that car together. Think about a hammer or a screwdriver or power tools. That's all considered overhead, actually. Now you're probably asking, why is that not a material? Well, the car itself needs an engine, steering wheel, all those things for it to be put together. But the thing that helps assemble it, like the power tool, that's not part of the car. You're just using it to put the car together. And that's why it's overhead. Hopefully you see that difference. You have the materials that are needed to make the car, but then you have the tools that you use to put those materials together. Those tools, that's an overhead. Depreciation, that's also overhead. Factory maintenance, so you have a janitor that cleans the factory floors, that's also overhead. Property taxes, insurance. So a good way to think of overhead is this. If it's not materials and it's not labor, and it's related to the product, factory if you will, that's overhead. That's a good question to ask yourself. Is it materials? No. Is it direct labor? No. Is it related to the factory? Yes. Then it's most likely overhead. That's the way I do it. And that helps a lot. Once again, we're going to practice this a lot, so don't worry. This is just some examples here of overhead. All right, so next we're going to have a little example. So variable costs. This is going to be pretty basic, but I want you to understand this concept. Say you produce 10 cars. And say your variable cost is going to be equal to about $1,000 a car. What is your total variable cost? Now right now, don't worry about materials, labor, overhead. We'll just do a basic example here. What is your total variable cost? Well, if you multiply these two numbers together, you're going to get $10,000. So 10 cars you produced times $1,000 a car equals $10,000 in variable costs. Now let's say this. Let's say that you produce 20 cars. Okay? So you went from 10 to 20. Now remember, it's still $1,000 per car. That hasn't changed. But what does change? Total variable cost changes. Now it's $20,000. So the idea is that the more you produce, the more cars, the higher your total variable cost. Let me break that down for you. So your per unit cost, right? Remember, it's $1,000 per car or per unit. That doesn't change, okay? Your per unit costs generally do not change. Now what does change? Your total variable cost. The more units you produce, the higher your variable cost, right? Take a look one more time. The per unit cost doesn't change, but your total variable cost does. Let me scroll back here, okay? I want you to see this. Remember, you produced 10 cars at $1,000 per car, $10,000. But now, 20 cars you produced. Your per unit amount is the same. But now, $20,000 is your total variable cost. So the idea, once again, your per unit cost doesn't change. But your total variable cost, the more units you produce, the higher your variable costs. Hopefully you see that. And the same actually applies to the reverse. The less units you produce, the less your total variable costs. Hopefully you get the difference there between total and per unit. Per unit doesn't change, but the total costs will go up the more cars you produce. Total costs will go down the less cars you produce. Hopefully you see that. So that's variable costs in a nutshell. Materials, labor, overhead are the main types. And then with total variable costs will go up the more units you produce, but the per unit amount doesn't change. These are important concepts you have to know. Hopefully right now you're just taking notes on this, and we'll go ahead and practice some more test questions in a little bit, and you'll see exactly how this works. So hopefully that was helpful. Thanks for watching. I'll see you in the next video.